Hi, this is Randy Finney with Right Side of the Chart, and this is an almost closing market wrap for Tuesday, October 18th, 2022. When I say almost closing market wrap, it's 337. I'm just going to get this one out there. If we do anything crazy, I'll tell you what changes. But at this point in time, you're always going to get some last minute ramp or dump into the close on big volatile days like this. But here's what's happened in a nutshell. We have taken back, we broke out. We broke out above the downtrend line, and more importantly, that 269.28 to be exact. That was the low back in mid-June, or bear market low. And so as of this moment, by the time I'm done with this video, the closing bell will ring, and I'll just scrap the video and get another one out if anything much changes. When I say much, we came, look at the back test of that level. You can see that candle. I'm going to put my crosshairs on it. The pop-up box to the left will tell you the low of the day was 268.74. Again, you're talking 50 cents on a 270 point security. You're talking mere basis points. So that is effectively a perfect back test. And again, give or take a percent or so when you're talking, test of these lows or key levels on the daily time frame. On the 5-minute chart, 10-minute chart, yeah, you want to hone down. You don't give near that much a margin of error. But on the daily chart, and as I've been saying for a long time, the most important thing on a daily chart is how you close the day. So here it is in a nutshell. Anything close on or around that level today, a little bit lower. Just not a huge dump into close to close down here. I don't foresee that, but hey, anything's possible. In the last 20 minutes, we've seen a lot of incredible reversals and big moves lately. And again, those are signatures in a bear market. That's when you get those big moves. So let's just go for now and say that's a breakout. We'll take it on face value with a big grain of salt, or a lump of salt really, because it is earnings week, and then next week are the big things. So the one takeaway I'm going to continue to say is expect volatility, expect whipsaws, and I do believe by the the end of next week, once all those big tech stocks are out of the way, then the market moving fangs, and we'll have a good idea. So at this point in time, I'm taking it on face value, this breakout, and if it fails, look, it fails. So I told you before, as far as swing trading, it's more not really a line in the sand, but if you wanted to just say one line in the sand, it's this level. So pretty much below it, anytime this week, bearish and short, or out of longs, and above it, which we are now, into longs and out of shorts on the swing trading account. That's it. What I did earlier today on the remaining shorts that I had, I put stops. So if we bounce much, this candle is deceptive. It's green now because we're positive, but when you look at what happened, we popped all the way up. Here, let me go to my 60-minute chart. So I'm just putting stops in here on the remaining swing shorts that I have, because either this is a one-day fake out and we'll break down and we'll go back down. So I have stops somewhere in here on the accounts that I'm not using futures. I have a couple accounts that aren't futures accounts. I deal with a QID, things like that. And that's another thing. Sometimes I'll trade SQQ in those accounts, IRAs and stuff, but when you expect volatility and some indecision and back and forth grinding, like we'll probably get over the next week with earnings, then you don't want to use, you want to lean away from the 3-time ETFs. Either use a 2-time like QID, or a single, if you're short, or your QLD is a 2-time long, QID is a 2-time short, PSQ is a 1-time short, no leverage, and of course QQQ is the 1-time long, no leverage. But when you look at what happened today, we popped up. Remember, we hit that level, brief overshoot with the opening order imbalances, and pretty much it was a rejection, which is also at the bottom of this gap right here. Big old gap. Also another reaction low there. Also a gap right there. Reaction high. Pretty good level, and that's why these levels were given to you in advance the other day. And so far they're playing out well. We came down here. We danced around this one, but then there's a back test of that 269 level, I call it, and that's pretty much what we've hit all day. Look at that. Since they faded the gap, boom, hit it, bounced, hit it, bounced, hit it, and there it is. And we're probably going to park the day on around here, and as long as we do, again, a breakout's a breakout, and so I consider that bullish, and probably favor more upside right now throughout this week, unless there's a big surprise, whether it's earnings or some other geopolitical or economic event. And if we move below, you still have a gap down here, top of gap. The top of this gap is also likely to act as support. So, really that would be, if you want to give it a little margin of error, not too far below that gap. And there's the bottom of the gap and so forth and so on. Okay, let's not make it any more complicated than that. Let's take it down a notch to the, we're still in a 60-minute chart here, and then I'm going to take it down. This is the 60-minute chart of QQQ, no, I'm sorry, NQ, my apologies, NQ, the futures. We were just on QQQ. There's that minor downtrend line, comes off the recent highs in mid-September. Here's your dates down here. So about September 13th, 14th, somewhere in there. We come down, lots of reactions. We broke out today, so that was bullish. We ran into the first resistance level, good one at that. That was not necessarily bearish, but it's just the initial reaction there. And then, of course, we had the negative divergences that I showed you this morning, as well as, kind of predicted in yesterday's video on that 10-minute chart, because we didn't have the divergences. So the futures carried up overnight into this morning, which I'll get to in 1 second. And then that was a catalyst for the pullback. But look where we're closing today. That big 11,100 level right there. Good, really nice support, I believe. And you also have trendline support, uptrend line support just below it, and you have the downtrend line in which we're backtesting. So this is what should happen and what I suspect will happen for the bullish case. Anything more than that, you've got one, not your last chance, but let's call it the second to last chance support down there at about 10,821. If that goes, and a little reaction low below it, then you're really heading down towards those previous bear market lows, and at that point you start breaking up the divergences, foiling the breakout, everything else that happened. So all right, let's keep it simple as of now. Next stop, 11,540, I believe, and then a big level up here, 11,784. Based on what's happened, I think that's doable in the next, maybe even this week. Again, if we don't get any big surprises on earnings or the economic front, and that's about a 6% rally from where we're at. So, yeah, market's about to close. If you trade QQQ, you have to decide if you want to go home with it, long or short. If you trade NQ, I think you can make an objective case to go long here with a stop somewhat below down there for a swing up there for that maybe swing towards that 11,785 level, and that would give you a nice RR. So again, what did I just say it was? 6%, I think. Yeah, 6%. So let's say you gave yourself a 2% stop loss somewhere down here. That's a very attractive risk-reward ratio. You can also target that uptrend line right there. Or I'm sorry, downtrend line, the larger downtrend line. Okay, and now we'll step it down all the way down. Let's go down to a 5. 5 and 10-minute charts are similar. Okay, so this morning there's that 11,357 level I gave you before, and that's that divergent high that I mentioned we put in this morning with a brief overshoot of that level. Then you broke this little wedge, gave us a pullback there. On the 10-minute chart, I had 2 uptrend lines, and this is that lower one that I gave you this morning. That was my max pullback target, and we hit it. And you can see here on this 5-minute chart, which again, you're just stepping down the 10-minute, cutting those candles in half. These candles print every 5 minutes. There was your divergent high, give you a nice short entry there at resistance and or on the break of the minor uptrend line. It was good for a, well, let's just say you shorted the level, not the overshoot. That was about a, what is that, 2.2 and a half, a good 2.5% pullback. I'll take that all day long in NQ. And then right to the uptrend line there with a little bit of divergence there. Well, divergence is enough on the 5-minute chart, and then resistance right here. See, there's that previous reaction high. So tonight, futures need to punch through there. That would be your next buy signal. That's 11,242-ish, and then go on, continue on up. Otherwise, a break of this level, well, could and would likely usher in more selling. Although keep in mind, we can extend this divergence a little. If they want to do a whipsaw, shake out a little bit of longs, you have support. I would at least give it down here to 11,034. We'll call that 11,030. In doing that would give us a shake out, clear out some stops that are probably set below this uptrend line, and then still be able to put in a divergent low on this 5-minute chart and give us a catalyst for a rally. But again, anything you trade in earnings season, you're risking gaps in either direction. So either, well, if you know what you're doing, these are the levels. I'm giving you levels. You decide how to trade it. If you don't know what you're doing, either stand aside, learn, or keep things light. There's nothing wrong with cutting your teeth on trying to trade the intraday charts, but don't do it with heavy position sizes in a market like this, because it can really go against you quick. And like I said, if you trade futures and maybe the NQs are too big for you, with the leverage factor, you can use the micros, which are MNQ. Just put the letter M in front, and that gives you the micro. I think it's 1/10 of the leverage factor of the NQs. Trades the same exact chart, same price level and everything, just has a smaller multiplier, which is your leverage factor. All right, there's the charts. That's what I'm looking for today and into tomorrow. Crude oil. Let's do an update on crude oil for you. Let's go to USO. This is a 60-minute chart, only because I had that already queued in the 60-minute time frame. There's some support there at about 67.80 right there. We had a downtrend line and a divergent low and a breakout, and we're coming back testing support. However, when you look at the big picture, the daily chart, this is what I want to show you. So forever and a day, since all the way back up here and here, these short sell signals, I have maintained a swing target down here at 58.60 and this primary uptrend line on USO. This is the crude oil ETN. So whichever comes first, at this point the uptrend line is going to come in earlier, but you may overshoot that briefly. So we'll call it about $60 and or the uptrend line. We had the breakout of the downtrend line one day, but that was a false breakout, aka whipsaw. We fell. And this was back here. It was a big level to me. It was big support. That's why I had it color-coded yellow. 67.61 is that level. And I was waiting for a sell signal, which we got. I thought that was going to open the door for the move down there, but we didn't. The divergences that I had been highlighting, I was a little concerned about that. We had positive divergences and on CL crude futures as well. That played out for this rally, which then ended in that whipsaw. Bottom line is, here we are. We're back to that level, and the same thing. I think if that level breaks, then that should open the door for that last leg down, and I also think it's going to happen. I think that's most likely. PPO, if you look down here, PPO can be used as in several ways, not just the divergences that I like to sniff out on highs. That was a divergent high that marked the major top. This was a divergent low that marked the rally here. But I like to look at two other things. Number one, on a lot of securities, if the PPO, particularly the white line, the signal line, which is a 9 EMA, if it's above the zero line, which I just drew here, there's your zero line, dotted line, your trend is bullish. And you want to buy pullbacks to that level, pullbacks to support. When you cross below, the white line crosses below, you are now in a bearish trend. That often coincides with breakdowns of support, or you want to look for a breakdown of support after that. Then you're in a bearish trend. And then once below it, the zero line tends to act as resistance, just like it tends to act as support when tested from above. So you can see here the PPO has rolled over. It hasn't yet made a bearish cross, and that's the other thing. So in addition to divergences, in addition to where the posture of the PPO above or below the zero line, the other thing, and it's super simple and fairly effective, look for the high level or PPO crossovers, clean PPO crossovers. What do I mean by clean? See how the lines have a lot of separation here? That if it crosses down, that's clean. You want to stay away from using bullish and bearish PPO crossovers when you're in a sideways, choppy sideways, or a sideways trading range like that, because you tend to get whipsaws. This is a clean crossover. You had clean separation all along. You had a clean bearish crossover there. It said get short. Clean bullish crossover there. It might have told you to get long. At least you got out of your shorts and you sidestepped that trading range. But since then, this was the last crossover right here. It was a bearish crossover. It gave us that. Then we had a bullish crossover right there, gave us that nice tradable trend, and believe me, these are big trends. That alone was about 15% rally since that bullish crossover. And now we're poised to, but have not yet made a bearish crossover. Be careful, because sometimes it looks like it's imminent when you start heading down, and then sometimes they bounce, and even sometimes still they whipsaw. But for the most part, you have a bearish PPO crossover pending with a potential rejection at the zero line. And so bottom line, if you break this level, especially take out those lows, it'll probably be a quick swoon down to that final swing target there. I would like it better if we didn't just come off this divergent low here. But in a bear market or a bear trend, see these divergent lows, they play out for rallies. Sometimes you pop a trend line and then they get sold into just as the rally starts to look good. This one had a little more traction, but has been sold into since. So bottom line is support is support right there. Take out 67.79, and if you want to trade futures, my preference, you have some support there comparable at 82.34 right there, that if broken should do the trick. And what I like about this is, as far as a short trade, we don't have divergence right now. We had it, but we're starting to burn through with lower lows on this 60-minute time frame of CL crude futures. So there it is. So that could take us down in crude. It would also, or should also, be the catalyst or help the stock market rally, because remember, everything right now is about inflation. Everything. It's about the Fed, what they're doing to stop inflation. So if crude continues to fall, it's already been in a downtrend, a pretty good downtrend. I think that's also what's helped buoy stocks lately. Natural gas is falling as well. And if that continues, again, no guarantees, but net, it should be provide a tailwind for the equity markets. So UNG, natural gas, ETN, I've already covered that one a lot lately. Not so much, but I did do an update recently. I was covering a lot when we were trading, and we had swing trades, long and short, here and here and here. We consolidated. That was the last short from up here. We swung it down to this trend line was the target, and then I told you just yesterday we finally gapped below there, and I said once you go in a consolidation range like this and you have especially a pretty pronounced gap like we did yesterday, there was that candle, that usually determines the next tradable trend. And there's an example too of a foiled smackdown on the PPO crossover. See how it looked like we were getting a low-level PPO crossover like we got right there? But look what happened when the lines were poised to cross but didn't. You can look closely, you see the PPO got rejected, a perfect rejection on the crossover attempt, and that's pretty bearish stuff. So that's probably going to take nat gas down to at least test these lows, maybe even more. Yeah, look at a weekly chart. There's a nice uptrend line here we might hit, and that would be another 20% downside if hit. So I don't have super strong conviction on those, but again, I told you guys I'd be looking for some other trade ideas for you, and those are a couple of them. So that's it. Let's keep this video short. Closing bells in 6 minutes and nothing changed. QQQ, right where I started the video pretty much, and looks like, again, don't read too much into any late minute rip or dip in the end of the day. In volatile markets, those are both the ETFs as well as mutual fund doing that last minute position squaring. Mutual funds must meet redemptions when people are pulling money out, or if they're getting inflows, they can buy. And then ETFs actually have to square off in real time, at the end of the day. So you're going to see, always get some last minute movement. And again, being that we're a few minutes from the close and we're right there it is. We're right on the back test. I'm calling this for what it is, a successful breakout so far in confirmation of the bullish engulfing candle the other day. Do I bet it hard? No, but I'm long now. I'll go long, and they may well stop me out overnight. I'm not trading heavy right now with the over the next week or so. I'm mostly focused on just gaming those quick rips and dips off the 5 and 10 minute charts at NQ as far as that goes there. All right, guys, I'll wrap it up, get the video out to you guys, and we'll pick it up tomorrow. This has been Randy Finney with Right Side of the Chart. Have a great day.